Welcome back. You're watching HFO-TV.
Welcome back to HFO-TV. I'm Greg Frick, partner here at HFO Investment Real Estate. And today we have the benefit of having Joe Cortright speak here with us, Director of City Observatory. How are you?
It's great to be here.
Maybe give a little background. What is City Observatory, and kind of give a background on what you've done, and we can kind of get in and talk a little bit about what's going on in Portland.
Sure. City Observatory is a virtual think tank on urban policy, and we focus on the 50 largest metropolitan markets in the United States, basically all the metros with a million or more population, and do original research on housing, economic development, equity, and transportation. We also have daily commentary on the web at our website at City Observatory.
Now, do you have local people in each metropolitan area, or is it how?
No, we're a data-driven think tank. So our view of metropolitan areas is largely driven off of economic data, and then we work with clients and partners in individual communities.
Got it.
Provide our data.
Based out of Portland? Or
Based out of Portland.
Oh, lucky, who can imagine, yes. And where does Portland rank in the top 50 in terms of size?
We're a little bit above the middle. We're about 22nd, 23rd, depending on what yesterday's census numbers showed.
Right, okay. Well, we know a lot of talk lately in Portland, and I think nationally, has been affordability. And that's when we're involved in the multifamily side. So maybe you can give a little kind of an update on kind of where you're seeing kind of the cause of maybe the housing shortage in cities, and kind of policies, and where we're going and where we've been would be great, I think, for our audience.
Yeah, so there's really a confluence of kind of three different things that are going on that influence affordability in cities. The first thing is, in the United States, there's a growing demand for urban living. More people want to live in cities. Partly that's a change in taste, partly that's a generational shift. It's really clear, and we've followed this group we call the young and the restless, 25 to 34-year-olds with a 4-year college degree or more. They're increasingly concentrating in cities and in large cities in the United States, and within metropolitan areas, they're moving more towards the center of cities. The number of those well-educated young adults is increasing twice as fast in what we call close-in neighborhoods within 3 miles
of the downtown core
CBD, as it is in the rest of metropolitan areas.
And that's happening across
just
the United
about everywhere.
States. So this is not a unique West Coast thing.
No, 3/4 of the large metropolitan areas in the U.S. exhibit that pattern. And Portland and a few other places were ahead of the curve in that. That started happening here in the 1990s. But now it's a nearly universal pattern.
And does it matter about the education level of the cities itself? I know Portland, Seattle, very highly educated, a lot of bachelor. Is that drive it more to the core as well?
Well, yeah, it turns out that, to back up a step, the most important factor shaping economic development in the United States right now is how well educated your workforce is. We can explain 60%, more than 60% of the variation in economic success among cities just by knowing what fraction of the adults have a 4-year degree. So the cities that are gaining smart young people are the ones who are getting an economic boost as a result. And those two things feed on each other. Young people come to dynamic places, places become more dynamic because young people.
And it just kind of feeds upon itself.
And it feeds on itself. And the second piece of this is real estate markets are responding to that. So there's this growing demand for urban living, and we really actually have a finite and slowly growing supply of urban space, of great urban places. And so what we've seen, particularly in the last 15 years in the United States, is something the economists call the urban rent premium has increased sharply. So the rents and home values close to the urban core have way outperformed suburban values.
And it's just not rents, it's home value. I mean,
they all go together.
We're in the apartment industry, and we always hear, and I'm always telling people, hey, you hear about increasing rents, but if you look at home values, it's the same concept within the same neighborhoods. If it's in the core, we've had a lot of appreciation.
Yeah, and I can maybe just show you a quick slide on how this has changed over the last 30 or 40 years in the United States. And so this is what we call the rent gradient, and it's basically how much people pay for a typical home based on how close it is to the urban center. So on this chart, 0 would be downtown and 20 would be the edge of the suburbs.
Got it.
And if you go back to 1980, the houses in the center didn't sell for very much, if anything, at a premium compared to suburban areas.
And that was the flight to suburbia.
Yeah, it was the vestiges of that. And then, but steadily over each of the succeeding decades, that line has gotten steeper in the center, which means people are paying a bigger and bigger premium to live in the urban core. And there are a lot of reasons for that. One of them is walkability. We know that more walkable neighborhoods and more walkable homes have appreciated more than places that are more automobile dependent.
Okay.
But again, it just reflects a demand for more Americans living in cities, and we aren't building that many of them.
And you've got the natural shortage because it's, again,
Yeah.
within the core, it's existing.
Yeah. Yep.
The ramp up time and the delivery time is so much longer there.
Right. And because particularly in cities, we've made it really difficult to build more housing. And that's sort of where, things, ultimately all these forces come together is in the apartment market. And in Portland, we went through a period right after the Great Recession kicked in 2007, where the housing market just fell off a cliff. Our new housing construction fell off a cliff. Right. And so the best way to do that is to look at what we call the housing drought in Portland. And what I did is pull together some statistics, and these are the monthly building permit numbers for the Portland metro area. And not surprisingly, when the economy went into a big tailspin in 2007, 2008, new housing starts dropped off appreciably. We went from something like 5,000 new apartments a year to 600 apartments a year. But even though that was happening, even though construction and new starts fell off, that didn't mean people didn't stop coming here. Portland continued to be an attractive place for smart young people. I don't know if that's exactly the year that Portlandia started broadcasting.
I think it's right around, yes.
But so when you compare these two lines, the red line on this chart shows the population growth per year, which runs about 30,000 people plus or minus every year moving into the metropolitan area, and the number of housing starts dropping precipitously. And so, you have this continual increase in demand as more people move here, and you're not building very many new units. And clearly what happens then is we get into a serious shortage of housing.
Right.
And in the housing market, what that means is higher rents. And the next chart shows really the pattern of rent increases in Portland over the last 5 or 6 years, since 2012. And right during the first few years after the recession, or during the recession, rents were very subdued. They didn't grow very much. It was 2% a year, and then it went up to about 4 or 5% a year, and then 6% a year. And then in 2015 and 2016, we did hit double digits in Portland.
2 years in a row, right. I think at that point we were the #1 metropolitan area in rent growth.
Yeah, yes. And that was really the logical outcome of not building units for a long period of time and then having all this additional demand come in. And finally, vacancies dropped way down, and everybody knew that things were really tight, and prices started getting bid up. And then, fortunately, if you're a renter, that's turned around in just the last 12 months or so.
Because we've had enough supply brought on.
We've had a lot more, we're still growing, but there's been a lot more deliveries have come into the marketplace. And as a result, we've gone from double-digit rent increases to basically flat, 0%
Especially
increases.
Within the core.
Yeah, these are Zillow's numbers for the Portland metro area. So it's.
Then I think we're seeing a little tick up on vacancies. We're seeing some concessions here and there come back in the core. So it's.
Yeah. Well, the other thing we're seeing, frankly, that we didn't see a little over a year ago is for rent signs.
Yes.
All over, all over Portland. This is something we pulled together on City Observatory, just going around northeast Portland in about 15, 20 minutes, and you see something. For rent signs were about as common as Donald Trump signs.
Yeah, not very.
In 2016.
Yes. Well, we talked up a little bit. I know we talked to economists. Is if you looked at the economics, I try to explain to people. Yes, there's a lot of cranes up in Portland now, and yes, we've had a lot of building. But if you really looked at it and you took that supply that's been, kind of like a little snapshot of supply and spread it out, it's really not going to meet the demand. And yes, we should have been building more units coming out of the recession. The lenders weren't actively lending at that point. So we had this kind of even more demand that we needed more supply. Yeah. And as we had the continued demand come, that's the issue. Because I have all these people, oh, geez, this is crazy. We've got all these cranes. We're going to be way overbuilt. Like, you don't understand. This may be even a short-term bump up in vacancy, but we're still under 5.
Yeah, absolutely. I mean, there's a lot of catching up to be done in the marketplace. It's still a relatively tight marketplace out there, no question.
And is this pretty common in the cities that you see?
I think the timing is slightly different in different cities. I think Washington, D.C. and New York were a couple years ahead of us. Seattle, at least a year ahead of us. San Francisco probably a year or so ahead of us, and so on. They went into the downturn a little bit before they came out of it in terms of housing starts a little bit more quickly. I think Portland hung on. We fell into the housing market slump a little bit later than most, and we're a little bit.
And we're a little late in terms of delivering supply out.
A little bit late coming out.
Okay, and then so I know a big concern is in looking at it is when you look at policies being made today and based on this kind of things that have happened the last couple of years. Is that really going to help long term or not? I mean, that's kind of a question that comes up. Inclusionary zoning is a big one that we've talked about a lot. Yeah, well, as an economist, it's this is very straightforward. If you're concerned about affordability, and in this situation, you want to see more supply get built, so you want to create lots of incentives for people to bring new product to market to increase the housing stock. And the concern that I have about inclusionary zoning and a couple of the other policies that are floating around out there is they create a lot of disincentives for people to consider investing in Portland. And one of the things that's happened in this market is that we've seen a lot of outside capital essentially flow into the region to get housing built here. Yes. And that capital has lots of options about where it can go. It can go into a bunch of different markets. And anytime you create costs and uncertainty, then you discourage the inflow of capital. It becomes additionally risky. You can't be sure. You're adding a risk premium on there. You can't be sure that a project's going to pencil out, or that these requirements aren't going to be too onerous. Or in the case of the Fremont Place project that the city of Portland just turned down, that you could march all the way through the city's process following all of their guidance, and then have, after substantial neighborhood opposition, turns out that you get your proposal turned down. And one of the virtues of the Oregon system has been for years that we have this general requirement that cities follow clear and objective standards in approving apartments and multifamily and actual all housing projects. And when that starts to break down, then I think people who thought they had some confidence about how to invest in Portland are going to be a little bit worried, and that comes at a bad time. And the other thing I need to say is, we don't build housing at a nice, steady, even pace. When you look at the historical record, most housing gets built in booms. So if we want to make sure that we have enough housing and we want to address our affordability problem, in terms of the old proverb, we need to make hay while the sun shines. Right. And so if we do something that blocks up the supply of new housing, even for a short period of time, we could a year, 2 years from now, find out the window is closed. We could find out that the Fed has tightened and raised interest rates. Alternative investments may be more attractive than real estate. Other markets where the capital can go. Exactly, and there's no guarantee that 2 years from now or 3 years from now there's the opportunity to build that housing. So it's very much in our interest to, as a city, if we're concerned about affordability, to get as much housing built as we can when all the market factors are working in our favor, as opposed to situations like we were in, say, in 2008, 2009, when to try and make anything happen was difficult because the capital markets in that case were all frozen. Now, are you having these discussions in other cities? I mean, is this the same? Or is it, is the West Coast a little bit unique because of the amount of immigration? Is that? I think there really are hot market cities in the United States and weak market cities in the United States. So it's most evident in places, particularly in the West. So if you go to San Francisco, if you go to Los Angeles, Seattle, Portland, Denver, very similar sets of problems. If you go to most of the Northeast and Midwest, say outside of New York, it's much smaller problem. But there are hot neighborhoods in every city in the United States, and they are bumping up against some of these same problems in many of those cities as well. So you have a situation like Chicago where, I think they have something like 43 cranes up in Chicago right now, and the city is losing population. Right. But it's because there are some extremely desirable neighborhoods in the center that are attracting lots of people, and meanwhile, you're seeing disinvestment in other parts of the city. So let's back to Portland. I mean, when you guys bring these up and kind of explaining the cause and effects, and maybe we want to call them the unintended consequences in some of the policies. I mean, how does the city look at that? I mean, how do they take that? And are you guys making any headway in trying to say, hey, look, why the people are ready to move shovels and dirts. We got to encourage this.
Well, I've appeared a number of times before City Council and tried to make as strong an economic case as I can. But I also know this is a very emotional issue for a lot of folks. When rents are going up, when people are being displaced or evicted from their houses, that is a real issue and a real problem. Unfortunately, I think that sometimes we cast this as a villains and victims story,
right?
And people who are actually riding to the rescue by building more capacity, we're doing things that we're pushing them away. When the thing that's going to make landlords more congenial and rents stay lower is to have more apartments getting built.
For the good of the community, we need more housing because affordability is an issue.
Yeah.
As an existing owner, you'd say, if you're going to restrict supply, that's only going to benefit me long term.
Exactly.
But for the good of the community, we're trying to push to get more housing, and that seems to be kind of a disconnect I see a lot of times with people not in the industry. Yeah. There's this assumption that we're just that owners are able to charge any kind of rent they want, and that's not the case.
No.
It's tied to demand, it's tied to supply.
It absolutely is. And the other thing that I think is kind of a pernicious myth is people say that, oh, well, you're building new housing, but it's not for affordable, low and moderate income households, which is absolutely true, but that's always been the case in the United States. We've never built new housing for low and moderate income people. We've always built new housing for middle and upper income people.
And then everybody.
And then as wealthier people move into that housing, the housing that they were in slides down market and becomes available to the rest of the population. And so unless you keep building new housing at every segment, but particularly at the high end, then housing doesn't trickle down, doesn't filter down to lower income households. And one of my favorite examples is the humble ranch home, the 1,200 square foot, 3-bedroom, 1-bath, single level home that we built tens of millions of in the United States in the 1950s and 1960s. We built them all over the country. And today, in most metropolitan areas, that's the backbone of the affordable housing stock, is 50 or 60-year-old ranch house.
Which was, when it was built,
was solidly middle income household. That's what people were fleeing the cities was for this ranch house. Well, in places like Cleveland or Detroit, that ranch house goes for $30,000, $50,000, $60,000. In Silicon Valley, in San Jose, that same ranch house goes for $1 million. And the reason is they didn't build enough housing to meet the demand at the high end, and so those houses didn't filter down to be affordable for low and moderate income households. And
as I always tell you're exasperating the problem when you're talking about on the core, because if you have to build vertical housing is more expensive, and it's very problematic to try to build vertical housing for affordable. So you build vertical housing, which is middle to upper, and then kind of everybody else gets to kind of move up a class.
Well, and the other thing we know is that the demand is very much in the center. That where we have a shortage of housing is, and actually what we call at City Observatory, a shortage of cities, by which we mean opportunities to live in great urban neighborhoods. That's where the price of housing is getting bid up. It's actually getting bid up in the kinds of neighborhoods that we built in the United States prior to World War II.
Right.
These sort of traditional gridded streets, sidewalks, with a mix of commercial and residential uses so that you can walk to the coffee shop or the grocery store or the school or the playground, that aren't as auto-dependent, that are more bikeable and more walkable. And we just don't have very many of those neighborhoods in the United States. And that's why so many people really want to move back to cities and take advantage of it.
So long term, if you see cities that are putting policies in place that are restricting supply, do you see that you're going to see capital outflow out of those cities into other metropolitan areas that are more open to?
Well, yeah, I think that it's very clear what we're seeing in San Francisco is San Francisco would be 2 or 3 times bigger than it is if it didn't have.
And we've been a huge benefit.
Absolutely,
Oregon's been a huge benefactor.
Portland's been absolutely has been a benefactor of that, but the fact that it's so expensive to live and do business in California generally, in San Francisco in particular, in the Bay Area, means that a lot of activity that might have a really good reason to be there isn't there and goes other places. So there's I think very little question that
that's an
housing
argument.
Costs displace opportunities for economic growth.
And that's an argument we make a lot of times is, the direction that you're heading with some of the policies, not, in terms of restricting supply. Because again, you're not restricting demand. We still have demand here, but at some point, if the supply is restricted to such a point that affordability becomes even a harder issue, that demand will wane a little bit and people are going to look for other opportunities, and that's...
Yeah, and the other thing we know is that if we don't build housing at the high end of the market, those people don't go away.
Right.
What they do is they bid up the price of other housing for everybody else. So the people who suffer when you don't build high-income housing aren't high-income households. It's everybody else down the housing food chain because there's less supply for them and they have to pay more for it. So if we're really interested in affordability and equity, we really want to be building more supply. And I'm very much in favor of the housing bond measure that Portland passed that provided like $280 million for housing. Absolutely good thing to do.
Yeah, we supported that. Yes.
And there are a lot of policies out there that can help, but adding supply at every segment of the marketplace is really important if we care about affordability.
Are there cities that you see that are addressing this maybe different than what we see here?
There are a number of really interesting and promising policies out there. I don't think anybody's got it exactly right. I think the Oregon land use system has some good features to it. I mentioned the clear and objective standards, the fact that cities have to allow for a mix of housing types. We don't have the situation in Oregon, as you do in many other states, where a suburb can say, we don't want any apartments at all, or we will zone for 2-acre or 5-acre minimum lots and essentially keep all poor people out, so we don't have that in Oregon. A couple of other states, Massachusetts has an overriding state statute that says if you haven't allowed any apartments to get built in your community, then the state can essentially override and grant building permits for that.
Now, is California doing that to some of the cities now in the affordability piece?
Well, California sort of has a theoretical requirement that they've never really pushed of housing allocations, but State Senator Scott Wiener in California has a bill, Senate Bill 827, that would essentially preempt local zoning around transit-served locations.
Okay.
So essentially what they would do is say you can build I think it's a 65-foot or an 85-foot building within a quarter mile of a frequent transit stop. So if it's next to a rail station or a place that has really good bus service, you're essentially going to allow by right apartment construction.
So that's the state coming into the local municipalities and saying, we're not, NIMBYism, whatever, we're not going to allow you to continue to spur or limit supply, restrict supply based on this. Do you think that's a move you think more states will do as this pressure becomes greater and greater within?
I think Senate Bill 827 is, and I don't know exactly what form it'll exactly take when it emerges from the legislative process if it does pass, but I think that kind of approach that creates a limited override of by the state of local land use controls can really change the game in a fundamental way. And it isn't that we need to build a huge amount more apartments, but we need to sort of open things up a bit.
Yeah.
And if we had more supply, then it would directly address the affordability problem. So I think that is definitely a step in the right direction. And one of the problems with local zoning is every individual city, suburb, and neighborhood has really strong incentives to keep the housing out and let somebody else deal with it.
Right. And on the affordable housing.
On lots of and
nobody wants density in their neighborhood.
And that's a very logical decision for any individual neighborhood because it maximizes your value and lets somebody else deal with the consequences.
You're creating the issue of affordability.
Yeah, and the way to break that down is to say, hey, everybody is going to have to allow some. Not that we're, because the concern now is if I allow apartments in my jurisdiction, then all the apartments that get built in the whole metropolitan area are going to end up in my neighborhood.
Which we've seen here in East County. I mean, where you've got east of I-205, where now you've got the school district saying, hey, we can't have any more high-density housing on here. We don't have enough school space for it. No. The rest of the city needs to take their portion of that.
Well, I think to the extent that there are perceived negative consequences to that, it makes sense to spread it out. Right. Absolutely. But we're going to have some schools and roads and transit for people wherever they are.
Yeah. And do you think this message is, just curious, the message is kind of getting through? Do you think, sometimes it's a supply demand, but do you think politicians and policymakers are trying to see, hey, wait a minute, I think there's a revamp of the IZ zone in Portland, which I think there's an acknowledgement that it really didn't achieve what we were hoping it would achieve. Where do you see that going in 18 or into 19?
Well, I think nationally there's this YIMBY movement, the Yes in My Backyard movement,
Right.
of people who are saying, who've looked at it from I think a social equity and an environmental perspective, as well as a housing market perspective, and say, we need to allow housing for people. We need housing for, Portland for everyone is the
Right.
group here locally that espouses that. So, but I think there's a growing recognition that that's the case. And then that creates a set of conditions where I think we can then think about things like this Senate Bill 827 in California, and I would hope that people recognize that things like inclusionary zoning, at least the way the Portland program is structured, are mostly counterproductive.
Right, right. Okay, well, great. Well, thank you for coming. If you want more information, you can just go to the website below. Again, we use our research team. We use the blog all the time and your information for a lot of our projects. And again, just trying to educate the market as to what's going on and how policies have some unintended consequences long term. You're making decisions based on a short term, I don't want to say bubble, but a short term characteristics, but you've got to look at the long-term view of this
Absolutely.
thing. Because housing takes a long time to deliver. I mean, that's the one thing. This is not like I can say I want to deliver housing and I've got housing in 6 months.
Yeah, that's basically the problem we're in, is that demand can change really quickly,
Right.
and supply takes a couple of years to respond, and that's essentially what's happened here.
Yeah.
We had a big run-up in prices until supply responded. It's responded now. Prices have leveled off, and if we can keep pushing on supply, they should moderate further.
But now you've got people saying, I don't want any more supply here, and that's
Yeah.
and it's kind of
Yeah.
yes, it's kind of offset to the need. Again, well, thank you for coming again.
My
Very
pleasure.
informative, and we'll see you next time on HFO-TV. Great, thank you. That was great.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.